Price has not touched it yet on futures. Price will still go up if price wants to use this area. Price will still go up, and by the time you check on your CFD might rate this, and perfectly that zone on futures will be right. So we are coming to that in details when we go to data analysis. So the first process is liquidity. Yes, is data. Is your data correct or wrong? So what do I mean by that? All right, what do I mean by that? So let's say, for example, here now, you have this. You have this zone. Okay, so we have something like this. So let's say we have something like this. Now look at this. So we have something like this. Let me complete it this way. Okay. This low leads us to this high. All right. And the chart, this high leads us to this low. And I could see some of you guys are doing what we call crossbreeding, which is totally wrong. When we're talking about session overlap, liquidity, and the likes like that, it is about what gives what. For example, this low is the origin of this. So if this I will be available, the relationship is between this low and the aggressor directly. If this I will be available as liquidity. Okay, so you will be crossbreeding if you now have something like this. When this is the major origin of this, and this has been broken. If it was when price is still here, that's still better, but this now has been broken. So here now, let's say the highest volume OR is D plus. Highest volume OR here is also D plus. But when price reached this particular low here, it was a certain D minus that rated. And let's say this low here was D plus. So, because you now think this is exhaustion absorption, you now say that this is available as liquidity. You are wrong. The origin of the move has been rated. If it was here and there is a valid demand area here to push price, meaning this wasn't available in the first place, and there is a valid demand area here to push price, that would be standard divergence, will be correct. But price has now rated this aggressor, this passive with this aggressor. The aggressor and the passive are same coordinate. So why would this be available? Because you saw this internal one. This is crossbreeding. This is wrong. The same thing for sessional or whatever. I think I've answered that. All right, let's go back to what we are doing. So basically here now, we have this particular high data issue when it comes to the process of HORC that could make you get a wrong thing or wrong view of the market. Now, on your futures chart, you see that there is full exhaustion here already. Full exhaustion here. Like full, all of this. Maybe D was missing here. Price has created a Maya high, gave that maybe D minus that is missing. There is full exhaustion absorption. Good. But then, when you now see this, when price came to ready, this low leads us to this high. This is higher low, higher high. You now saw that a certain exhaustion absorption is happening here again, and it is full. It is happening here again. That is when you want to call yourself to the attention of data. One of these is wrong. That's what we are saying. At that moment when you spot that, you want to ensure that number one, if you are in position here already, you want to take some profit. Number two, you want to go and reconfirm your data. And how to do that, we'll speak more about it on data analysis. That is number one thing in the process of HORC. This shouldn't happen. This shouldn't happen. Let's move to the next step. The second thing about the process of HORC is available liquidity. Available liquidity. I have something like this, for example. All right. And then I have this. Now, here, price did a full absorption, exhaustion absorption. Full exhaustion absorption. And you probably even see one nice supply area here that you could sell from. You know, when price do a full exhaustion absorption here, this is the target. This is not the target. Hope you know that. This is internal. This is the origin of this move. This high starts the movement of this low. So maybe by session overlap, by weekly overlap, by monthly overlap, this low is available. You now see one supply here. And you now think, oh yeah, fine, maybe even unmitigated or something like that. And then you sell from there. You will make loss here if this high is available as liquidity. Not just that, if price anticipated to go back here after reading this high. Listen attentively. You will make loss if this high, the high here, is available as liquidity, not just available as liquidity, if price rating it ought to be a full absorption that should go here. Maybe here, all right? So maybe here, for example, there was no, this range, maybe in this range, for example, okay? So in this range, for example, there is full absorption here. So let me do this. Now, this range, there is full absorption, making this high to be available. So we have full exhaustion absorption here. Full exhaustion absorption. Listen very well. We have full exhaustion absorption here. When we have full exhaustion absorption here, meaning that this high is available. That is number one. The high of that other block supply, whatever it is you pick as your own PO high, is available as liquidity. Not just that, okay, the absorption that happened here externally, okay, the absorption that happened here externally is probably not complete. That is, price is still what? Is still bearish. So price still ought to go down to this particular low here. So the absorption that happened here maybe is not complete. We have, let's say, for example, we have W minus D plus S plus, and the aggressors are saying W plus, but also D plus, and maybe S minus. So daily OR is still missing, meaning that price is still bearish, which means that this buy is only to go and take out what? This internal liquidity, this high right here. So if you are now caught in the trap of just looking at any absorption you want to sell, any absorption you want to buy, And you now see a full absorption here. And you sell. You will make loss because price will not sell it. Price will what? Will complete its auction. It will complete it. It will rate that is the supply price we seek will be the supply above the true liquidity. It will rate it all together, both this I that was available as liquidity, this that was available as liquidity, even though this seems to be complete. Price will go here and drop. Bearishness. And then you will make multiple losses here because this could be a lot of distance than normal. So you could make multiple losses here. In fact, the same example is happening presently on Euro USD. This low is available as liquidity. We have weekly divergence here. In fact, it seems to be complete. But this right here is an available liquidity due to full absorption that happened here. It is an available liquidity. Price will take it out first before any story. Then, if this is not available as liquidity, maybe, that is, if we are still to continue lower here, point on if we are still to continue lower here, this is a very good word, supply area, all right? A rally, okay, nice base with indecisive candles, and then a drop. Nice supply area or nice AOI or what, nice order block area or whatever you want to call it. That is if this is maybe also available. Or even if it is not really available, price has taken its first major liquidity. Price can now maybe. But if this is also available, depending on the auction that price is pushing higher here, then price can now drop into this. You would see a lot of examples and examples and examples like that over and over and over again. So if this is available, that is, if price is still bearish to this, then this will be respected. If it is not available, this might even get rated for if there is full absorption here as well. This might even get rated as well first before price actually what? Sell. All that I will leave you to go and confirm yourself. All I want to do is to prepare it for you. I will not give you too many examples. I will not do that. No. You have to work. If you cannot work, then leave the concept. No one is begging you to study it. When you waste your time very well, in the next few months, next few years, and you think of this concept again, maybe you come back to it if it is still available. The smart ones will know the beauty of this concept and will know that this answered everything that they have been worrying about. Will it take you time? Yes, it will. And just like your school takes you 5 years before you graduate and also of work, it's the same way these will take you time as well. Also depending on your dedication and your learning ability. This is a fact. So price will auction higher to take all liquidity before actually what? Selling. That is case number 2 of the process of HORC that I want to discuss with you. Don't forget the first scenario, a case whereby you're having absorptions at opposite end. Reconfirming your data is important. A case where you have full absorption here, but this I is liquidity. Price will not sell yet. I hope that makes sense. All right. So that's that. That's that. Then the next thing is timing the market. Timing the market is when you now have your HPO theory in line with your true supply and demand zone. True supply and demand zone. Okay. I'm not here to reteach you AOI or to teach you supply and demand zone. All right. Maybe if I think of talking more on that in the future, I will do that. But for now, I just want to deal with what I want to deal with. Now, let's take here, for example, timing the market. Now, like I said, this low is available based on weekly divergence that happened here across all data sources that you could think of. Even DXI, DXY, that particular area diverge. All right, so there are, after you consider the first process and you've understood how that could be, so you know that because of that, price could keep auctioning higher. That is, even though price seems to have given you what remain, it means that any divergence you still see to buy higher, you should be buying higher because of the available liquidity. Or you just leave markets, you become neutral and let price take that liquidity before you get there. Okay. So that's that. I will still apply my HORC indicator to show you one or two more examples after I round off. And for those that have been asking me for indicators and the like, indicator is only being sold in-house just yet, okay? So for those that are outsider that might want to buy it, it is quite, if I would sell it to outsider, it will be quite on the high side. All right, so, and I will advise money you will use for that, you probably should just use it to even get the mentorship in full majorly, rather than, because indicator is not how you trade. But outsider, we peg it at $500. And that is a lot, because indicator only show you what you can do manually just to make your work easier. So I don't know, you guys focus a lot on things that do not really matter. So only those that maybe have mastered the concept, that have learned the concept, should be the one to think of indicator. You don't know how to do this manually, you don't even understand what you are doing, you want to use indicator. Indicator will not show you to buy or sell. My indicator is to just help you so that you won't have to be going back to the chart to start marking opening range, high, open range, low, target. So it will do that for you automatically. That's the difference. But as a student that is still learning, you can just do that manually yourself. So indicator as an outsider is not what you need now, and that is why you see me not advertising it. As an outsider, you don't need indicator. What you need is what? What you need is learning, is mastering the concept, all right? So that's it. That's it. So majorly here now, we have this. Sorry, I'm just trying to help you guys mark that. I did not say you should sell here. I told you, number one, confirm if this I is not available. That is number one thing to confirm. So, and after you confirm that it is not available, then you can 100% sell from that. That is a very, very nice supply zone against the new week. Okay, so I'll leave you guys to find that out. And of course, your first objective target will be this low in that case. All right, so having said that, we are in timing the market. Timing the market is a function of three things: marking correct supply and demand areas, and also HPO theory, and also data analysis, Okay, so those three has to be combined in order to have the best markup. Now, let's even talk about our classic supply and demand. Look at this. This is a rally, but this is not a base. When I'm talking about a base is should be something like a doji, spinning top, and the likes. What do we mean by that? That is, its body must be smaller than like 50% of the whole range of the candle. In this case, the candle we have here, the body is far bigger, much bigger than the what? Than the whole range of the candle itself. So this is a decisive candle. This is not an indecisive candle. An indecisive candle shows area of balance. So there must be a balance. Your balance area is the base. So truly we have a rally. A rally should be a candle like this, but either a decisive candle or an explosive candle like this. So a rally, but there is no base here. If you will find any base here, is to probably be on lower time frame, but not on this daily time frame. Okay, so even intrinsically, this is not based on daily supply area. This is not a good supply area normally. But does it mean it cannot be respected? Had it been that this high is not available? Yes, it will be respected. And the area I would mark, even there will be this area here, this week to week base. That's what I would have marked if this high was not available. That would be the range, because that would be my base. That is, I will see this as a drop, base, and then a drop. But this in itself, the first candle, is not a base. So that's what I would have marked, of course. And that's where we would have sold from. But because this high is available, therefore, that is the first quantifier, and that is why I have to arrange to you guys that is not the way to go about it. You have to understand all those things basically first, right? You have to understand them first. Okay. So it is very, very, very so much important, right? It is so much important. Okay. So it is very so much important. So yeah. So that is it. That is a base right there. Okay. But look at this here. You can see this is a base, the body far lesser than the range, body much lesser than the range, much lesser than the, so these are all bases. And this is obviously an explosive candle, a rally, a range, a place of balance, and a state of imbalance. Decisive candle followed by explosive candle. So that is a very good supply area. So that is the first thing. Oh, when it's all been said and done, when you have checked out the whole process of HORC, so timing remains. So that is number one, marking the correct area of interest or supply or demand areas. Okay. Then the next one, therefore, it will be HPO3. HPO3, HPO3, HPO3. So HPO3, for example, from this high here, you know, from the absorption high, this is where the absorption happened between the passive here. I think this was W minus, and the aggressor was W plus. So this is where the last absorption started happening that made this low to be available, like I told you guys. So you want to time the market from there, from that high, all right? That is the first candle that reached that. You want to time the market from there. We already have many candles here on daily, so that means we could check higher time frame to check how that would be. So let's look at this, for example. Let's go to the weekly chart. So from the first candle that read this candle, this is candle one. This previous week that just ended yesterday is candle two. And next week will be candle three. I think that is even bringing more confidence for sales, isn't it? Provided this high is not available, please check. You go and sell blindly and you come to my DM, and you sell aggressively, that's your problem. Because some of you will just never listen. Or for most of you, not even some of you, it's all about making money quickly, and or it is not about getting the concept right. Okay, you will learn because you've been doing the same thing over and over again, and you'll be seeing what it fetches you. So that is like the third week candle. Okay, that's like the third week candle, confluencing into that area. And I think not just that, then you want to also count your daily candles that will fit into that day to know which one. So 1, 2, 3, 4, 5, 6, 7, 8. Monday candle, if Monday candle comes here. But another thing to note is that if I want to use this daily, because this daily is already much here in this regard in counting. The question I would love to ask myself is, personally, is that is there divergence happening between this I and this aggressor here? That's another question I will ask myself. If there is divergence happening there between that and that would probably also make maybe this low to be available, or that is happening here, as this external high that will make this low to be, to be available. Okay, so if there is something like that happening there, it means that I can reference the immediate one for my daily. This is the third day, but we are not inside supply yet, and the weekly HPO3 has not confluenced. So third day, so Monday will be fourth, Tuesday will be fifth, and Wednesday will be what? Sixth. So it could be the sixth candle Wednesday that will come here, or from where we counted earlier, if it is also Monday that came here from this, it is also correct. All right, you just need to practice and practice to know how those works. So that is majorly timing the market. Then the third part of timing the market is your data analysis, and that is where it gets a little bit tricky. Okay, that's where it gets a little bit tricky. All right. So now, what does that mean? Now we have on our futures chart, we have what we call the non-adjusted futures chart, and we have the adjusted futures chart. So we have the non-adjusted futures and we have the adjusted futures chart. All right. So our non-adjusted futures chart is a major reference for any analysis, for pricing, to know your opening range, to know which participants, is this the weekly, the monthly, because it is the one that show your data exactly as it is with the whole gaps like this that happen there. And it is the one that show the real data as it is without trying to, back adjust or front adjust. Look at this, all right? The whole gap, it will show you. So this is the non-adjusted chart. That is when you search your 6E. This is the non-adjusted chart. But we have the back adjusted chart. So for our back adjusted chart, all right, that one is filling in all these, intraday gaps that happen. It is filling it in. That is therefore making it lagging at some point, or even making it it can make it too forward or lagging at some point in time. Our normal futures chart is to tell you if this high is available, you need to find out through the absorption that happened there and the likes. That is our futures chart. It has to tell you that. It has to tell you that. But our non-adjusted, therefore, could at times now be the one to confluence to a certain nice supply area. So this is where you get your back adjustment here. Look at where my mouse is now. Come here to the bottom right corner, right here. All right. This is where you have it. And when I click on it, you will see the difference in the chart now. I'm still on futures chart. You see the difference. Can you see the difference? Can you see that on that what did you notice? You would see that this high has not been rated. The normal futures chart is already here, and this is not there yet. So at times, that nice supply that you see, that particular nice supply, listen very well, that nice supply like this, at times, can be here. It could have been here. All right. So at times, that nice supply that you see, this is the only thing we use a non-adjusted futures chart for. That nice supply that you see can be here at times. So when you see it here, but the normal futures chart would read it. Why do you think the normal futures chart would read it? It will read it because the true pricing told us on that particular normal futures chart that this high is available. So the normal futures chart will show you that that high is rated. But you would not see the normal futures chart getting to that particular perfect supply area. Forget CFD. CFD is that broadcast chart you are using. That is not what you use. That's why some of you will see price will raid your POI or will not get to your POI and it will go in your direction. I'm telling you now where to mark your correct AOI, order block, whatever you use, should be on futures charts strictly. Both of them interchangeably, depending on what is happening. So if this high is available as liquidity, as we have established on Euro USD presently, it will read it. The normal futures chart will read it. But the back adjustment, provided there is a very nice supply here, the back adjustment, let's say this range here, this beautiful supply we see here, is found there. The back adjustment chart will now be the one to use to time the market. Will you be the one to tell you that that supply shouldn't be rated? Even though it was rated normally, according to futures chart, truly it was rated. Why? Because the high was available as liquidity. I don't know even if I should release this video. Trust me. I'm saying a lot now beyond what I plan to say, but it's all good. The reality is only few of you will still do well. It's not a course. The same way only few that study engineering do well. It's the same thing. No matter the beauty of what you are learning, some will still use and dump, especially if you do not pay for it. That is it. So that is everything about data analysis. I don't want to talk much. I've really said a lot. You're smart enough. I've really said a lot. Okay. So this is the end of 2024 mentorship. I remain Andre. This channel is something you ought to share with your friends, family. I mean, you yourself should subscribe. Why should you see information like this and just like, even to your enemy, you ought to share it. All right, guys, that's the end of 2024 mentorship. You might not see a lot from me till the end of the year or till 2025, though I will still be releasing some videos once in a while, but this is where I draw the line for now. And even if you see content from me towards the end of the year, it might not really be related to the chat because I've done well for you all. I just hope you guys maximize it. And for those that will be teaching this to people and will be claiming it as theirs, oh well, we will see. We'll see how far we go with that. But I believe it's not fair. You should always give reference to your source, and you can do content on it. You can do that. So far, you are giving reference. You are tagging me. I don't mind that. But it will be a scam when you try to own it and you are not the owner. All right, guys. So that's all. I stay blessed. We thank God for the end of the mentorship, and I wish you guys the best. Good luck and good trade. All right.